Now, market breadth remained decisively positive at 3, with 66 advancers comfortably outpacing 22 decliners. Interestingly, while the number of deals thinned, trading volume and value spiked, a classic sign of deeper pockets at play. In other words, fewer trades, bigger checks, liquidity is flowing, and the bulls, for now, remain firmly in charge. Now, Nabila Mohammed, research analyst, Chapel Hill Denham, is going to be joining us on our discussion for today. Good morning, Nabila.
Good morning. Thank you for having me.
It's great to have you on the show, but let's get right into it. So over the past few sessions, we've seen the NGX extend its rally, adding trillions in value and posting consistent gains across key sectors. Now, investor appetite appears resilient despite macroeconomic headwinds. So in what practical terms exactly is fueling this sustained bullish momentum right now on the Nigerian exchange?
So to be honest, some of the fundamentals, or should I say most of the fundamentals, are right. And if we look at it from a sectoral standpoint, each of the sectors have their own stories that they're telling that is foiling the performance that we're seeing across the sectors. We understand that for the oil and gas, the whole acquisitions and transactions that have played out in that space has resulted in the gains that we've seen in Seplat and Aradel. For banking, we understand that they are recovering from, the whole forbearance that happened with them last year. They have raised capital, and investors are well aware that with cleaner books and stronger balance sheets, these banks are going to do well in 2026. So they are positioning in there as well. If we look at the telcos, largely led by MTN, we know that MTN has recovered from the whole FX losses that is recorded in previous years. It started to even surprise the market last year with an interim dividend, and they are about to release their full year 2025 results. It has also fueled performance of, that particular stock. If we look at industrials as well, the story is that they're expanding capacity. Lafarge for years did not, expand capacity from the 10 million metric tons that it was before, 10.5 million metric tons that it was before. Now it is seeking to add more to that level. It means that there is more that can be done. There is a demand for it, and for them to, improve their capacity, that is something that has shaped investor sentiment in the name. Danksem is also one of them if you look at the industrials. So it is really, really broad-based. The consumers too are not left out. We are going to see them, most of them, or some of them, return to profitability, resume dividend payment, and all these are positive news flows for that sector. So overall, really, these are some of the things that have shaped the positive sentiment and has sustained the bullish run in the market. Now, this is based on sectors. There are other things as well that have shaped the positive momentum in the market. The T+2 settlement cycle that we started on the 28th of November 2025 is another reform that has shaped the improvement in transaction volume and value, which you mentioned when you were giving your intro. And it just simply means that with quicker settlement times, investors can channel those funds into more stocks or other fundamentally sound names that they can invest in. So really, things have changed, and that is what is, sustaining this bullish run.
All right, sorry to cut you short there, but Nabila, we've seen that in just one trading session, market capitalization jumped by 1.84 trillion naira, contributing to a two-day gain over 3 trillion naira. Now, for viewers trying to put that into perspective, how significant is this surge when compared to recent market performance as well as historical trends?
To be honest, if we compare to historical trends, this over 1 percentage gain is not something that is significant, because we've seen 5% gain on a day. Like, we've seen gains that are well above that 1%. And if we look at the entire market from a market cap standpoint now, you will think that we have rallied, or the market has rallied so much. But let's bring ratios into this discussion. And for ratios, I'm speaking to the most basic of them, just speaking to the total market cap as a percentage of GDP. We are still around 20%. Fine, we have improved from 9% that it was in 2019, and we are currently at around 20% based on the current market cap that is well above 110 trillion naira. But it still simply means that we are undervalued, because based on that particular ratio, evaluation of 100%, meaning you are having your market cap almost the same with the economic output of your country, means that you are fairly priced, means that you are either fairly priced, and above that is you're also overly priced. But we are still below 50% in terms of market penetration, and that simply means that there is some level of headroom that investors can still benefit with regards to the rally. So this over 1% gain in the market cap or increase in the market cap, it is not something new. It's something that we have seen before, because we have seen 4%, we have seen 3%. That is way bigger than what the 1% is.
All right. Nabila,
like
sorry
said,
once again to cut you off.
Still right.
So we need to take a quick break, and when we get back, we'll continue on this discussion. Please do stay with us. Welcome back to Business Edge, and we're currently taking a look at NGX's market cap as it hits 113 trillion naira. And we still have Nabila Mohammed, research analyst, Chapel Denham, with us. So Nabila, I'm pretty sure you've been observing the market, and we've seen so far that particularly strong performances are coming from banking, oil and gas, and industrial goods. Now, all of which outpace the broader market. What's driving the strength in these sectors? And why are investors rotating heavily into them at this time?
The three sectors that you mentioned have seen some level of transformation. The banking, they've raised capital, they have stronger balance sheets, they've taken care of their loan books, meaning they have cleaner loan books based on the forbearance that they exited in 2025. And all this would result in better performance for them in this 2026. And that is why we're seeing investors that understand what has been done in that space take position in those names. And let's not forget, banking stocks are stocks that, help investors with dividend when we look at dividend yields. So if you are invested in a banking stock, most of these banks, if not all these banks that are listed, most of them pay dividend, whether some pay interim or some pay final. That's for banking. Oil and gas has seen transactions with regards to acquisitions, with regards to increasing stakes in these businesses. And I'm speaking to the likes of Seplat with its acquisition of MPNU over in the past. We've also seen with Aradel that recently listed, and on the NGX, and also its transaction with ND Western. All these are positive news, and we've seen it reflect in their prices. And this Seplat, for one, is a dividend-paying stock as well. It pays dividend on a quarterly basis. Investors understand that, and they are positioned in there. Industrials, the story is really that they are improving capacity. They are expanding their capacity. There is still that demand for cement. And if we look at the contribution to GDP with regards to real estate activities, with regards to construction, the contribution to the increase in GDP, that's contribution to the accretion in GDP. Real estate is one of the growth drivers, one of the sectors that have driven growth in the past, and it simply means that there is demand for that business, and we are seeing the players in that space ramp up their capacity to meet that demand. So that is basically what has driven investors to position in these three sectors, and we are seeing it outperform the broader market.
All right, thank you so much, Nabila Mohammed, research analyst at Chapel Hill Denham.